someone told me like, oh, it's just for the wealthy, and it only makes the wealthy wealthier. I mean, look, I have never had a job in my life that I didn't work for someone who was poor. So I mean, or rich. I've never worked for a poor person, and I know that's kind of a cliche line, but 55% of American jobs are small business.
Expanding our money supply because the Fed has been restrictive. I'm going to explain that.
Credit card loans, car loans, those are short-term borrowing rates, and they are low right now.
Microsoft and Google came out and said, we're not going to reduce our billions of dollars of spending. Existing home sales, 4 million home sales annual rate. That's with a little drop.
Hey, it's KP coming to you live from Monterey. And there is a scenic tree over there, for those that know. I'm here for an executive roundtable, and we had our senior management meeting call all day. And I'll get into some economic stuff. But a lot of you know that I used to live in Central Texas. I lived in Austin for 9 years and spent some time on the Guadalupe River twice a year, every year for 9 years. And just want to, send out our condolences and, just our hearts go out to the devastation that happened. And with all the flooding in Texas, the storm season is typically in the spring. All of us that travel know how brutal it is going through DFW and Houston. And so like July 4th weekend is not typically a rainy season. So I think this area where Camp Mystic was hasn't had a flood since like 1986 or 87, something like that. So pretty unexpected. I'd see comments online like, why do they have the camp there? Obviously they might think about doing something now, but 104 people lost, 28 children in that camp alone, 10 more children and accounts are missing. And then another 20 perished in surrounding counties such as Travis County and other counties. Travis County is where Austin is. So just, while we celebrated our freedom, there's just devastation and it never stops, this crazy world. So anyway, it started, be depressing at the beginning, but I figured it'd be worth just, giving out a little love to all those families out there. It's really heart-wrenching. Okay, so tariffs are back in play, which means uncertainty is back in play. Stock market sold off a little bit. I don't know how much longer that will occur, but the tariff deadline for July 9th on the 90-day reprieve is coming, and some letters are sent to some countries basically saying, here's your new rate. You didn't get a deal done. Here's what it is. So is it a negotiating tactic? Is it for real? Are we getting more certainty? Do we know how to calculate earnings and growth and inflation and GDP? But I tell you what, I think, there's still some uncertainty, obviously, in the weeks ahead. August 1st is a deadline that was brought up as a potential time for a new deadline. So, look, South Korea, Japan, and some others are getting letters. So we're just going to see how it plays out. The stock market was pretty overbought. It's the most hated V-shaped rally ever. To quote Tom Lee from FundStrat. So, I'm not a financial advisor, not responsible for your losses, only your profits. But, maybe some selling will happen this week. We have a CPI next week. Not a lot of data this week. So I'll try and get something out Thursday. One thing that moved markets, obviously, is the one big beautiful bill. Now, what's interesting is, so like the budget resolution process has to get passed, and then, then they have reconciliation between the House and Senate, and then they pass the bill. That was for fiscal year 25, which started, I think, October 1st. Is that right? I think that's when they would. So just so you know, like October 1st coming up is when fiscal year 26 starts. So they'll be doing this all over again. They're working on things like revenue, debt ceiling, and spending. So if you want to see a little teaser here, that's why it's windy. So I promise a good little shot in the end. This is like one of the most gorgeous places in America. I'm not even exaggerating. But it's windy and I don't want to mess up my audio. It's interesting to see the commentary on the bill because it's supposed to be pro-growth, right? And so I heard something this morning, CNBC does a good job. First thing in the morning, they have, a conservative, they have a liberal, then they have a journalist, and they just kind of like took shots at Scott Bessent. And it was an interesting quote that they said is that, the bill is trying to drive growth and is trying to deregulate and make, I don't know, just give tax cuts. And, whether you believe all of that stuff or not, I mean, someone told me like, oh, it's just for the wealthy and it only makes the wealthy wealthier. I mean, look, I have never had a job in my life that I didn't work for someone who was poor. So or rich. I've never worked for a poor person. And I know that's kind of a cliche line, but 55% of American jobs are small business. And so no tax on overtime and tip income. I mean, how many times have we tried to do loans for waiters and waitresses and bartenders and we can't, because they can't claim their income because they don't want to pay taxes. Now they can claim with the IRS and not pay taxes. And so I don't know. I mean, I think there's a little bit for everyone. It's not great that we're spending more and, the debt and deficit will increase over time, but it's a pro-growth, supposedly, bill as opposed to just spend with more regulation. So I'm hopeful. I'm not trying to toe a party line or defend anyone because it's not a perfect bill, but yeah, put your comments down below and everyone do all the weird stuff and, show all of your biases and whatnot. But hopefully I'll gain some data and some nuggets because that's what I care about. Like, are we going to grow our way out of this thing? We better, because we just keep adding to debt. I will say that China has problems too. I mean, their money supply is slowing, but the lowest pace of M2 money supply on record. Their credit is going down. Their home prices are outright, showing depreciation. So, they're having problems too, and they're the other economic power in the world besides us. So, we'll see how that goes. Now, the jobs report last week, just kind of a follow up. That 75,000 jobs that were created on that were state and local. Now the government jobs that were cut federally have not really shown up in the jobs reports, but suppose it's as much as 288,000 jobs. But some of it's held up for legal reasons. Some of there's some rehiring that's been done. So maybe, it doesn't show up, but, the federal government has, there's contract workers. The federal government has been hacking a lot of jobs. So it's interesting to see state and local kind of show up and prop up that jobs report. But I'll tell you, money supply and credit, that's what makes the world go round. China's hurting on money supply. That's why they're selling treasuries, just to raise money to fund their fiscal stimulus. And that happens a lot. So, whether it's the dollar or treasuries being sold or whatever, this stuff, it's all the flow of money that we talk about all the time. I will say, as it relates to money, obviously gold has been catching a bit. Bitcoin, in 36 years, it took the internet to gain 1 billion followers. It's only taken what's it been since 2008? So what's that, like 17 years, something like that is all it's taken for Bitcoin to get 1 billion users. So it'll be interesting to watch if cryptocurrency continues to become a store of wealth and an alternative to the dollar. If people are worried about the strength of the dollar or whatnot. So you guys know I'm pro crypto, whether you like it or not. I mean, it's here to stay. It's an ETS, institutional money's on it. So, it's something that's out there, something to keep an eye on. Now let's get to housing real quick. Purchase money applications are up. I mean, Housing Wire does a great job. Here comes the money shot, by the way. So you got to get used to this noise for a second. But purchase money applications are up every week for like 20 weeks. So that's a good sign. Yes, inventory is up, and yes, there are price cuts, but there's still a lot of business being done. Okay, here we go. Here's the money shot. Not a bad place for a summit. Beautiful. I think that's Carmel Bay out there. There's seals out there. There's stuff out there. Why do they go and ruin such a beautiful place, the golf course? Bunch of people getting frustrated. Anyway, hope all's well. Get back to you Thursday. Please don't at me. I didn't pick this place. I'm just here to learn. So, but it is sometimes in the summer you got to take some time out and explore the beautiful parts of our country and forget all this craziness and all. Like, I swear LinkedIn's becoming like Facebook. Please don't make the comments like Facebook down below. Let's just have some data and some comments and try and enlighten each other. Have a good one. Cheers.
Hey, it's KP coming to you live from Corona, California. Back at the desk after being gone this week and attending a great executive roundtable with some good speakers. Sonu from Freddie Mac and Dwayne Duncan, who is our government liaison over at Enact. It was great to get some insights, especially with all the changes with Vantage Score being tweeted by FHFA Director Bill Pulte. How is the industry going to scramble and deal with it? We're all scrambling and dealing with it, but I know the GSEs are working on it, which is good. So more to come on that. And it's nice to hear some inside baseball about how the one big beautiful bill was passed, which obviously, they had to pass it. They had to, the tax cut extension to become permanent was in there. It was kind of a gun to everyone's head. It's like either you vote for a $4 trillion tax increase on Americans or you don't. And but the good news is there'll be a new bill coming up for fiscal year 26, which starts October 1st. So we'll have more time to watch the sausage making process over there in D.C. But the debt ceiling is up to $5 trillion, and we've got more debt and deficit. And I will say I heard some analysts, some stock analysts, kind of say the difference between this bill and prior bills is that it is geared towards deregulation and growth. And so hopefully we can grow our GDP, which does grow our tax base and does help offset some of the pay-fors, as they call them, in the bill, like the tax cut permanent extension. And so we're broke, so we have to find out a way to pay for the things that we're broke on, which is everything, because our GDP isn't enough to cover the interest expense that we put out. The interest expense currently is higher than our military budget, which is traditionally, over hundreds of years, the demise of any empire that is ruling the world economically. So hopefully we can get our stuff in order. It's interesting, the tariff policy is still the uncertainty that the Fed is looking at. And United Airlines, Delta, I believe, or maybe it's United, I apologize if I forget which one it was, but they said, hey, we guided on our last quarterly earnings that there's a lot of uncertainty, and then they said, oh, no big deal. The tariffs didn't impact us, and their stock ripped like 12% in a day yesterday. And I'm not a financial advisor. I'm not here for your losses, only your profits. But I will say, if we start to see Q2 earnings for companies that start to really kick off next week when the banks and the financial institutions start to report, if we see them say, well, we were scared and tepid like everyone else in the world about tariff policy and what it would do to impact our bottom line, but now we're okay with it. If we start to see companies say that, I think you'll see the stock market continue to rip. And that would also give the data and certainty for the Fed to say, okay, this tariff inflation thing is a nothing burger, and we're going to continue our cutting campaign because rates are too restrictive, especially on the lower socioeconomic demographics of our country. Higher interest rates are tough, getting a mortgage loan, getting a car loan, getting credit card loans, and when the Fed cuts the rate, those rates come down, and that greases the skids of the economy, and things grow because people buy stuff, because 70% of our GDP is people buying stuff. It's consumer spending. So I'm not saying it's going to be a nothing burger, but so far it has been. So if there's a little bump, something should show up next week on the CPI, which isn't the preferred measure of inflation by the Fed. They look at PCE, personal consumption expenditure, which we won't get till the end of the month. But that's been pretty low as well, at least to date. So fear, uncertainty, and doubt. It seems to be ruling the day at the Fed to keep the cuts from coming, and maybe they'll come. I think we'll probably get a 25 basis cut in September, is my opinion at this moment. I would have said before that, had there not been tariff uncertainty. So I'm a believer in tariff uncertainty as well, even though you probably consistently hear me say it's going to be less than feared. And by the way, the other term I hear, less than feared, that's kind of funny, is the stock market continues to disappoint to the upside. Did you miss the rally? Did you not stay invested? Did you pull out of stocks because of your political biases or your love for gold or whatever? I mean, our businesses in America are the best in the world, so pick the right ones. It's not as hard as you think. Look around, see what people are buying, see what people are doing, see what people are spending their money on. There's so much data for us to read online for free. You don't have to try and time the market, just be time in the market. So the tariff rate for Canada just got announced in the last couple days, and the market kind of shrugged it off, even though it is meaningful. But again, 11% of all the goods that come into the United States are imported, only 11. And so if we go from a 3% tariff rate like we did in the Biden administration, which every administration uses tariffs for whatever reason, if we go to a higher amount, if we go to 15%, maybe even 20%, I think, is the high end, fully baked in, effective rate on all countries. Can we survive that? I think so. I think consumers will do what they do with gas. When gas prices go up or airline prices go up or heating goes up, they just don't use it as much. So like I contend all the time, consumers don't have a gun to their head to pay for more expensive, cheap crap from China. So, or whatever the import is. So consumers wield a lot of power. And if they are strapped financially, they're not going to buy. Unlike our country, which is strapped financially, and we continue to spend and raise our debt beyond our means. So we'll see how it all plays out. I did saw an interesting chart that came out from the Mortgage Banker Association. It was the chart of the week. You can go to their website, mba.org, and you can go into the newsroom. And it shows the annual wage growth of job stayers versus job switchers. Remember from COVID and beyond, anyone that switched jobs got all this extra money. It's not the case anymore. Staying on your job pays more. Staying put stays more, just like staying in the market pays more. So if you're bouncing around, you're trying to time things, you're losing now. Job switchers are not making as much money as job stayers. So I thought that was an interesting stat. The data is there. Dr. Copper, what is Dr. Copper? I've talked about it. I thought it was pretty cool. Comments down below over the years. Had people not heard of Dr. Copper? The price of copper is kind of a barometer on economic growth, the economic engine of the world. It's in a lot of things. It's in telecommunications, it's in our phones, it's in electric vehicles, which is about to completely disrupt transportation as soon as Tesla full self-driving is out there. I mean, tons of cars on the road, no human error, 24/7. Anyway, copper prices had gone up about 15%. They fell off about 5% just in the last week, but it was interesting that the Trump administration is considering a tariff on copper imports, and that kind of hurts China. And there's a reason why that. China manipulates everything. They manipulate their currency. They dump steel. They dump electric vehicles. And now, there's copper miners, and then there's copper refiners, I guess is a way to use the word. They smelt it down, and they get it into usable form. The copper refiners in China are so abundant that they're literally paying for copper to get there to do their thing on it. And that could force local copper companies in America to shut down, just like we lost most of our steel industry and our manufacturing industry and our auto industry, and everything that we make in America has been shipped overseas because other countries, like in this case China on copper, have manipulated the system to where it hurts us, and it's purposeful. And so, the markets are largely shrugging off the copper tariff and proposal and the Canadian tariff, and we've got a big deal we're trying to cut with India and the European Union, and you have until August 1st instead of July 9th to try and get these deals done. So the market seems to have a little fatigue with the uncertainty, but also because they don't think it's as bad as feared the first week of April, which is good. So people look at their 401ks and their investments, and they feel wealthier, and they go out and they spend money, or they buy a house, or they buy whatever. And that's anyone, not just the rich. So it'd be good to get back to a more calm secondary market, a more calm treasury spread between 30-year long bond, which had a decent auction yesterday, and the 10-year treasury, or the 30-year fixed rate and the 10-year treasury. It's good to get a normalized spread because that actually improves rates, whether the Fed cuts or not, whether rates are, which are typically tied to a 10-year treasury yield every day or not. So that's a good thing. Rates can get better if that spread gets better, and having calm markets is good. So, and just to kind of put it on, tie a bow here on this global economy, India is the largest still growing economy. So they're growing, 0.1% on their GDP on the last read. They're over 6%. They're a growing economy. China is flat at 4%. The U.S. is slightly down at about 2%. So when you see these deals made with countries like India, it's a bet on a better partner that is willing to look at things the way we do in America and not manipulate things and try and be the superpower. And if they want to be the superpower, great. We're happy to give them business if they play fairly. And so I thought it was interesting to see some GDP reads. That's it. Quick little 10-minute video. Inflation report is the biggest thing coming out next, I believe, Tuesday and Wednesday. And then earnings reports. We'll get back to you on Monday. Have a great one. Cheers.
You've been listening to KP Talks Dollars and Cents, a top-rated show for those who want to learn about the economy and mortgage environment. Tune in each week for more episodes, and please leave us a 5-star review on Apple Podcasts and Spotify. Kevin Perenio does not render or offer to render personalized investment or tax advice through KP Talks Dollars and Cents. The information provided is for informational purposes only and does not constitute financial, tax, investment, or legal advice. For more info, follow KP Talks Dollars and Cents on all of our social channels.